Good morning, traders. It is Monday, June 30th. Markets are trading higher again this morning. Not a whole lot has really changed from what we thought on Friday, how we expected the market to close positive at new highs, and then for that to carry over into today. There'll be a lot of people hoping today reverses who are short the market. They're going to hope that it's a fake out yesterday, Friday, the breakout in the S&P 500, hoping it's going to get rejected. If it doesn't, we're going to see continued those who refuse to get out of their shorts. Eventually, the markets will keep climbing higher and higher until they hit the breaking point, and we see a big wave of another wave of FOMO of shorts covering now that the S&P 500 is there. And we could see a squeeze, short squeeze, and a push and a pop higher. But again, we need to see how this market is going to react. We are long the markets, long-term, short-term, with the S&P 500, depending on the strategy that you're with. And we just let the market do what it's going to do. We had a really good question from a member in our live mentoring session last Thursday. He says, what do we want the markets to do? Are we bullish? Are we bearish? Do we want them to go higher? Do we want them to crash? And it's a good question. I'm going to try to clean up my messaging so I don't confuse people, because my opinion, my bias is bearish, as everybody I think knows. But the markets are going higher and we are long the markets. So the key is we really want trends to just stay intact. We don't really care which direction they go so much. We want the stock market to go higher here. We want it to push higher because we are long the markets. We want to just try and benefit from all of that pricing to the upside. And eventually when it reverses and turns down, we're going to want it to fall and collapse. So that's, we want the market to move in the direction of our trades. Longer term, looking forward, and I know a lot of you feel the same way, we all kind of want a big market correction, a big financial reset. Not only can we avoid it, but we can profit from it. And then it gives us a new opportunity that could last 5 or 10 years to reinvest in all kinds of different asset classes, and including dividend stocks when they're finally undervalued or fair valued and they're paying big dividends. And we've got 5 or 10 years of upside potential. So right now, let's let the market keep unwinding, let the shorts get slaughtered, and we'll just keep riding it up and managing our positions to go higher. You can see here on the S&P 500, we avoided the crash. We got back in at 5% lower. We moved back up. We're deep in the money. We've hit a target with the S&P 500. We've hit a couple targets on our QQQ trade, up almost 13%. And we're just letting this market continue to work itself out. Our sentiment chart here on the left side here, the right side here, we've got deep red telling us there's huge distribution selling. We do not want to be involved in the markets, at least holding stocks during that phase. And now we're in this deep green, which is actually really hard to see, the deep green. But you can see deep green means money's moving in. People are very bullish. They're piling in. And we'll just let the market keep doing that going forward. Initially, we talked about this dead cat bounce. We actually called it and talked about it right here on this giant weak crash and close on a Friday, and this gap lower and washout. We called it on the Friday at the close. We should see the exhaustion move in the market, go into a dead cat bounce. It has gone into that bounce, and it has really kind of kicked over into a full-on rally. And you can see we go from a bounce to it kicked into a rally, and now it's continuing to go up, hitting new all-time highs. So more or less, that dead cat bounce is alive. It is not a bounce. It's a rally. And now the market is going to see if it's going to put in a massive double top. A double top doesn't mean it hits the same price and goes down. It just means it has to get close. And when you look at it from a monthly standpoint, it doesn't mean just a couple bars or a couple days. It could still be a month or 3 that pierce up to new all-time highs, only a little bit, and then reverse back down. And that'll still be a major double top. So don't think a double top is we've closed above it, now it's not a double top. It just is the general area. Trading usually isn't that specific unless you're really day trading down to the price. Long-term major market tops and bottoms are double tops and bottoms are the general area. It doesn't matter if they fail to make new highs or do make new highs. It's just the overall